Right now it's January 11th. I need to go to sleep soon. But if we look out to the February 6th, you can also choose the February 13th or the February 20th. But let's choose the February 6th. We can then buy a call debit spread, so that way it'll give us upside potential because GLD is in a bullish pattern. You can see over the past few months, it's gone up tremendously from about 370 all the way to about 415. We can buy the 422. We can then sell the 430. By buying the 422 and selling the 430, this gives us $800 of potential upside, and we're only going to pay around $2.58. Now, to finance that, we can sell some naked put options at strike prices where we would love to take ownership. What I like to do is I like to go further out of the money, and I'll sell 2 of them. So I'll sell 2 of the 384s. If I only wanted to sell 1, then I could sell 1 of the 394. But in this situation, I would prefer to sell 2 of the 384. And the way that we would do this is we would change this to -2. I finally figured out how to modify the order details so that it shows 2 naked puts at a strike price of 384 and then 1 long call debit spread at the 422 by 430. Generally speaking, I like to structure these trades so that they're around even or a small credit or even potentially a small debit when putting them on. You can see that in this situation, we would receive a $12 credit for every increment that we would put on. So if we wanted to do 2 increments, then we would sell 4 of the naked 384s, and then we will buy 2 of the 422 by 430 call debit spread. The great thing about this trade structure is that I'm picking up around $8 of potential profit, and I'm only paying around $250 or $260. To me, that's an arbitrage opportunity, even though I know that the most likely scenario for this trade is that all the legs are going to expire worthless. Additionally, by selling 2 of the 384 naked puts, because I would love to own GLD at a strike price of 384, which would be around a 7 or 8% decrease from where it's currently trading at, this would give me the opportunity to get assigned and take ownership of shares at a substantial discount. Another thing that I really like doing, you can actually add naked calls here if you feel uncomfortable selling naked puts. Let me model that out right now. All right, so in this situation, we're gonna sell the 470 call options as well. So here you can see that we're selling 2 naked puts at 384. We're selling 2 naked calls at a strike price of 470, and therefore we're actually picking up $108. By modifying the structure, it gives you substantial flexibility. Let's say I was more concerned that gold was going to pull back. In that situation, maybe I would want to increase this to 3 and then maybe decrease the short puts to 1. Or if I didn't want to sell 3, then what I could do, I could sell 2, and instead of making it $8 wide, I can decrease the 430 to 428, and therefore I would be able to structure this for a credit. If you have any questions, leave a comment below. Also, let me know if you like these type of educational videos. Please like this video and subscribe, and I appreciate your attention.